What do you think about the market in 2024? Let's pivot off of what you just talked about.
Well, so I think a lot of people have been shocked on my take on Bitcoin. I think that's, I've had like a lot of, really aggressive kind of comments on the letters. It's been a bit fun actually, because I'm quite positive on Bitcoin. I think it's like this asset that a portfolio with no Bitcoin is like a portfolio with no gold. It doesn't make any sense, and I think people have been stunned to think that I actually think the price of that's going up. I think the price of gold is going up. I think the dollar's going up. I think oil's going up. And I think that stocks, are probably set to be soft. And so that's what people need to be ready for.
Major investment themes of 2024. Where should you allocate your capital? We're discussing this theme with our next guest, fan favorite E.B. Tucker, editor of the Tucker Letter. Congratulations on the success of your newsletter.
Thanks for having me.
Thank you for being here. Let's talk about your newsletter and some of the pieces you've written about lately. What can we expect to learn from your work? Just give us some a synopsis of something you've written about.
Well, it's the only place I write. It's
the
only place I show up. I mean, it's the only thing that I do is write the Tucker Letter at ebtucker.com, and you've been a subscriber for a long time, and I appreciate that. And I found that people are lost in kind of marketing turmoil. They've got signals coming every direction. Why I started this thing was, this is a direct from me. I write the whole thing every other week, every other Thursday, and it's exactly what I think is going on in the market. And that's become more important than ever, because we have a scenario where we sit around and watch central planners. That's all we do, and we talk about the economy, we talk about recessions like this, but these are a thing of the past. Now we watch a group of people that gather in Washington to decide, what the price of money is going to be. And it's actually pretty easy to figure out. It's actually easier than trying to read the market, years ago. So we need to watch what these people are doing. And so right now I'm explaining how we're watching one specific indicator to know when it's time to get back and jump back into the pool, if you will, for a good time. I mean, that's what we're noticing here at this show, is that everything is pretty quiet. I think. I mean, the room used to be a lot bigger. The speculative intensity used to be a lot higher, and we're in this period now where we're feeling the effects of the Fed tightening and draining, and when that stops, we need to be ready.
All right, so you write about what you think about the markets. What do you think about the markets in 2024? Let's pivot off of what you just talked about.
Well, so I think a lot of people have been shocked on my take on Bitcoin. I think that's, I've had like a lot of, really aggressive kind of comments on the letters. It's been a bit fun actually, because I'm quite positive on Bitcoin. I think it's like this asset that a portfolio with no Bitcoin is like a portfolio with no gold. It doesn't make any sense, and I think people have been stunned to think that I actually think the price of that's going up. I think the price of gold is going up. I think the dollar's going up. I think oil's going up. And I think that stocks, are probably set to be soft. And so that's what people need to be ready for in 2024, is that you've got this period where we're all sitting around and watching and waiting for this turn to happen. And so that's how you want your portfolio to be positioned. And we run a portfolio in the letter, right? It's like we're ready for that in real terms, and that's a real portfolio.
So why are you comparing Bitcoin to the other asset classes? I mean, why?
Well, it's not the same. So it's not necessarily comparing, but Bitcoin is worth about $1 trillion at today's price, and gold's worth about $13 trillion. Sure. And a lot of Bitcoin is lost in wallets. It just doesn't exist. Nobody knows how to get hold of it, and a lot of it's locked up in big wallets and all these things. And we're in this period where the size of the asset base in the world, the size of the debt, the size of everything has gotten gigantic. So you're talking like $300 trillion, of debt in the world. And $1 trillion of Bitcoin. It's so easy that they could go to $2 trillion. It's like, ask 20 young people, okay, what would you like to buy for security? Gold, Bitcoin, bonds, farmland, whatever. The answer is going to be Bitcoin. And so everybody gets really confused where they start talking about all this terminology with Bitcoin. It's nothing to do with that. It's like you just basically it's like, why do stocks go up? More buyers than sellers. Why does Bitcoin go up? This ETF news is really big. It's really, really big. Okay, so there's a lot of people who could not own it before. Yeah. And I manage a trust, and you couldn't own it in the trust because it's too hard to keep track of it. You couldn't, the custody, okay? Yeah. So anyway, I'm trying to explain to people that a portfolio that's built for success, okay, is trying to be exposed to things that are going up. But it's like you could have 5% gold, 3% Bitcoin or something. It's like totally reasonable. It's totally reasonable. And so people, they become very extreme. Now what that tells me, when people are extreme, is that there's a long way for this to go, okay? Because it's not an extreme situation. You should definitely own, like in the portfolio, we have some chip stocks, we have these things that have done really well this year. It's like you got to own that stuff, and you got to own stable assets. And Bitcoin is stable, and everybody says no, it's volatile, but it's not. Look at the chart. It's not volatile.
Well, it depends on your time frame, I guess.
Look at the chart. I mean, it's like the chart looks great.
Right.
It looks really great, and I think that it's set to go up. Also, think gold's going to go up, but gold's financialized, and so with gold, you have this totally different complexity. And I just think, David, people are stuck in basically a washing machine of news information, and it's really hard for them to figure out where to point their cruise ship. That's the problem. They're in this cruise ship of life, and they're like, where's this thing headed? And they're worried about this, minute-to-minute system, and it doesn't really determine your results. It's all about where's your ship going.
You mentioned Fed pivot. What does that mean for asset classes and markets? Which assets will be most affected by the Fed pivot this year?
So everybody's betting on this so-called pivot. What I think is going to happen is the balance sheet got to 9 trillion. It's back to 7.5. Okay. And it's probably going to 7. I think 7's kind of the magic number for a couple of different reasons that are somewhat complicated, but I think 7 is the number to watch. And when that happens, I think we want to see what is the Fed going to do this time. It's going to be different. It's not going to be the same thing. I think they'll probably support the Treasury market. I don't think they'll support the mortgage market. So I think it's like where will they push their money cannon, and shoot the money. They have to manage the system. They want to manage where there's not long-term depressed periods. They want to manage against having a depression type scenario. And what that means is unintended consequences. And so we're going to have to be positioned to things that have limited supply and are going to see capital inflow. And so I think we're ready for that. I think we're sitting back. That's probably like second quarter. I think it's probably like the time for that. They're pulling $90 billion a month out of the market right now.
Right.
They've written papers about it. Nobody reads this stuff, but I read this stuff. But I think probably second quarter, that's down to a level where there's some shaking, and then they step in.
Okay, so there's reduction in the balance sheet. Is that necessarily going to be good for the equity markets, you think?
Well, the reduction of the balance sheet, you would think, is bad for equities, and it's bad for gold, and it's bad for Bitcoin. And it's actually not. It's not been the case, right?
Right.
And that's because we live in this period where everybody, it's like if you have a dog, for example, whenever you walk over to the cabinet and get out anything plastic, the dog immediately wakes up from a deep sleep and it's like, oh, this is going to be a snack for me. So this is how we think about the Fed now, and you're never going back from that, right? There's people that are in their late 30s. That's all they've known is a managed market, and so we hear the snacks rattling.
We're all Pavlov's dogs.
We're just sure that there's something really great about to come out of the cabinet.
Yeah, and okay, last year gold and stocks did well together.
Yeah.
Why? Yeah. Don't they move in different directions?
The gold price has a lot of reasons that it should be down. Okay, and we were talking about this on a panel yesterday.
Inflation's down, interest rates up. Yeah,
real interest rates are wonky, and all these. If you looked at these things in like a paper in school, you would say, yeah, definitely gold's 1,500. You would think, but it's not. It's at an all-time high, and as you can see, it keeps banging on this all-time high and sitting here, and it's ready to go to 2,150. I think is the target this year. And so basically, when you see that something is defying logic, you can tell that it's going to go more. And Bitcoin's the same thing. It's the same thing. And so, and stocks have done the same thing, which is wild because some stocks are trading at 10 times earnings in the market, like some old companies here, and then some new companies are trading at 80 times earnings. We have a company in the portfolio of the newsletter that's up like 50% since we recommended it. Okay, and somebody wrote into me complaining it's at like a 75 PE. I said, I hate to be the bearer of bad news, but it's probably going to earn into that and go higher. So
you don't have to give us specific names. Let's go to E.B. Tucker's newsletter for that. But just generally speaking, the places, the asset classes that you like the most, the sectors you like the most in 2024, and why?
Yeah, so we've got a huge play in cybersecurity, and we've written about it.
Cybersecurity. Why is that? Yeah,
we've written about it a bunch of times because I genuinely believe that there's going to be some sort of cyber event towards the end of the decade. It's going to be, we look at your phone and it's black. Okay, so I want you to, every time you get on a subway or something, every single person is on their phone, right? Yeah. Every time you walk in a coffee shop, everyone's on their phone. What's funny to me is also people say they can't meet anyone. So the society is in this zone where they're totally dependent on the phone. And what would happen if the phone went black? Okay, I mean, what would you be willing to give up to make that phone come back on? Okay, so I think that there's a cyber situation brewing. And when we look back from 2030, we're gonna say how we had a whole paradigm shift of how we interact with data, and it all happened off this cyber panic. And now our data, our privacy is all tied to a new way of thinking about cyber. And so there's companies right now that are super interesting to me that I think are gonna lead the charge of providing those services. And it's kind of like if you saw the automobile coming and you got in the tire business. It's like, you don't overthink it. You just say, all I know is I saw this guy, Henry Ford, he's gonna make cars for everybody. I'm gonna get in the tire business, okay? And if you did that, your name was Mr. Goodyear, you ended up making so much money, you built a museum to put all your art in, okay? So that's something we spent a lot of time on, because I think cybersecurity is something people wouldn't have expected me to write about, but it's an industry where you want to have some exposure.
Time to get in early in the decade.
Super easy. I mean, you look at these companies and everybody's business. If you're a regular person working at a company, you got a cyber chief, they have no idea what to do.
Right.
They have no idea. They're just trying to do anything to keep their job, because there's events happening all the time. There's data breaches. There's scams going on, phishing, all these things. You gotta have your phone. You log in a website. You gotta have your phone to get a code. It's nonsense. The whole thing is nonsense. And I have a hacker buddy that helps me with putting together like how to think about this, and he doesn't use any encryption. And I said, why? And he goes, there's no reason to hide what everyone already knows you have on your phone or whatever. And it's a good way of thinking about it, is that you're entering this time where our interface with our portal to the world is this telephone. And the business of protecting that data is a great business to be in.
Okay, interesting. And last thing, this year, major risks to look out for. We talked about opportunities, we talked about the Fed, risks to the economy, risks to the markets that you will be looking out for.
Yeah, so the biggest thing that I'm worried about is stocks that are going up right now. SPY hit a high last week. Stocks that are going up right now are all being driven by funds that don't actually own the stock. They're trading options, and then the dealers have to bid that up. And so you have a big air pocket there. And so if there's a period where the Fed finishes pulling money out, you got to watch the PR of the Fed, okay? They have a big PR machine. And they say, well, maybe we're not going to accommodate as soon as we thought. You have these big drops that go on. And then I think during these big drops, there's a big need for liquidity, and they get the liquidity out of the market. And so the stocks that I own them in a little bit smaller percentage than I would like, because I'm pretty convinced that I'm going to be able to top up on weakness. If you remember, 2009, Bank of America traded for 3. Okay, like 3, okay? Yeah. And now your dividends are like, a huge percentage of that price. And so I think you always want to have just a tiny bit. You don't want to be extreme. You don't want to be all in, all out, okay? But I think you want to have a tiny bit left in the cannon, so that if something happens quickly, like during COVID, remember, it's 3 weeks. You had 3 weeks of market turmoil, and then it kicked the other way, right? So it'd be wise to have one foot in and maybe like a toe out still. And that way it gives you some flexibility to get back in.
Absolutely. Okay, well, where can we follow the Tucker letter?
ebtucker.com is the only place that I write. ebtucker.com, Tucker letters every other week. There's no marketing. We don't bother you with any solicitations. It's direct from me. And a lot of people like at the end, I write about what I'm doing in my personal life. Yeah. And a lot of people, that seems to be the favorite section. But I'm going to have a lot of things to talk about this year. Yeah. And really excited about that more than anything.
Yeah. Big changes in your life, so read up on that. Thank you very much, EB.
Thanks for having me.
Yeah, thank you for being here, and thank you for watching. Don't forget to subscribe to the Tucker Letter and follow this channel.